This video is good through June 13th, 2010, which is Sunday. Welcome to the weekend edition. And the markets on Friday showed initial weakness because retail sales came to an 8-month low, biggest drop we've seen in 8 months. However, consumer sentiment did come out saying that we were more bullish, so the markets ended up rallying by end of day on Friday on very light volume, but closing in positive territory. Matter of fact, the week ended in bullish territory near the week's high. Actually, this is the S&P daily. We're going to be moving fast here. Our falling wedge broke out on Thursday. Friday, we continued to make a higher high, higher low, and notably, we are above the 20-day moving average. And the falling wedges are bullish, and we have a bullish convergence here, or divergence on the MACD. So we've been saying it for some time. Doesn't surprise me that we went bullish here. I'm still holding a lot of my longs. Matter of fact, I think virtually all but about 2. I have a lot of longs going right now, but this could reverse at any time. The broad markets as a whole is significantly weak, but I think we're going to have another rally higher. Just like I was saying yesterday, I do see a left shoulder ahead, and I could see a right shoulder popping up. And some people wonder why this could not blast through and make new highs. It absolutely could do that. We don't have an economic condition supporting such a big rally, but because of this run and then 100% retracement of that, the Fibonacci say that there's a significant chance that we will not even reach these highs again. So just based off of pure technicals, I do see us rallying here, but the question is how far? Statistics show and technical analysis show that we are not due to even reach these highs again, at least on the next try higher. So, but we'll call it like we see it. That's why I see if we do come up maybe 1150 and then drop, we will have a shoulder, head and shoulders, which is a head and shoulders reversal pattern, and then we will drop, especially if we get back down below 1050. If we get below that, all bets are off on the long side. But at this moment, I am bullish. I did hedge myself, so I'm hedged going throughout the weekend because anything can happen. And let's take a look at the weekly chart here on the S&P. Whoops, we don't need it that big. Let's come across, bring in the weekly. We had this big rising wedge, we broke the rising wedge, and now we're starting to pop. Now, what's interesting here is we have a lower high and a lower low, so that's still considered part of the down leg. But look where we closed. We closed right near the week's high, and it kind of has that formation of a hammer, but technically the lower shadow isn't 2 times or more that of the body. So what I'm looking for is on the week, next week, I need to see some sort of a move above 1100. That is what's key for me. And if so, we could rally higher. Again, I could see a smack in our head 1150 and dropping, but we could go higher. I certainly don't see us getting any higher than 1230. However, that's just my opinion. The opinions that traders have don't hold a lot of opinion as far as the markets are concerned. The markets will do whatever they want to. That's why we as technical analysts need to be very in tune to what technicals are showing us and be well educated in this. You do not want to be undereducated in trading because you will give back more money than what you make, and that's not what this game is all about. Let's also pull in the monthly. Here's the monthly on the S&P. The monthly, we come up, 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 up. We have started a down leg. Last month we have a lower high, lower low. This would have been the time, this month, June, would have been the time to see a major drop in the markets. Now, at this very moment, I don't see that taking place. Doesn't mean that it can. It absolutely can. We could see this, but check this out. We have a equal low. This equal low shows an indecision, especially here with a doji. Now, the month's not over yet, but there's a lot of indecision at this moment. I want to see how the month plays out. If we play out and we do not go lower than last month's low, May's low, then we have a good chance of doing another attempt to the upside, and that will be a really interesting leg to see play out. Now, this would be considered a tweezer's bottom if we were in a bottom of a down leg. That's 2 or more candlesticks going in one direction. We don't have that. We only have one at this moment. One candlestick, so I can't call this a reversal pattern. Why we're here, let's go to the NASDAQ. Let's start with the monthly. Here's the NASDAQ. It looks much like what we're seeing on the S&P, the double bottom, lower high, doji. So we'll just have to watch what this is going to do. Now this is the weekly right here. The weekly had this big rising wedge. We broke the rising wedge, but check out this base. We're finding support at the 200 week simple moving average coming across here, and look at this, big shadows, but look, there's more lower shadows than upper shadows, so that's telling me this is technically more bullish than bearish just as far as market sentiment is concerned. But the problem is we have a down leg with a lower body base taking place. This is a low base formation, which is bearish. So wow, when you put it all together, we have a lot of indecision taking place. But as far as the big formation is concerned, long as it hangs out down here on the lows, this is bearish formation on the weekly chart. Although the dailies are certainly showing us a bullish momentum. Look at this. We come down, we get a double bottom here on this downtrend. We reverse back up, but check this out. I want to show you a couple things. Technically, it's not a double bottom yet. Why is it? So there's your comment. This is down in comments. Here's your quiz. Why is this formation not yet a double bottom? I want just put your answers down there in comments. And right now we have what's called a descending triangle. We have these two lows, flat line, and then a descending top. Look at this, resistance, and we're at major resistance. We did clear the 200-day moving average, that's the red one here, but the 20-day moving average is acting as big resistance at this moment. So there you have it. Thank you for being a part here of Free Trading Videos, and for all of you out there in YouTube land, just hit subscribe. If you click subscribe just above this video, you can do it at any time. It will not stop or mess up the video, and you will forevermore get a little alert so you never miss one of our videos ever again. So please hit subscribe, and we love your comments. For everybody out there in video land, regardless if you're on our website or somewhere else out there in video land, we covet your comments. We read each and every one of them. Take care and safe trading to you.